Hello and welcome to AI Market News by LMM. Before we begin, a quick disclaimer. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. All right, let's get right into our market briefing for October 14th, 2025. There is a lot going on today, and you can really feel a sense of fear in the air. First, we're going to take the market's temperature and see why it feels so risk-off. Then, we'll unpack the intense geopolitical headwinds that are causing all the trouble. After that, we'll see how key assets like currencies and bonds are reacting before we tackle the big question, are AI stocks in a bubble? And to wrap it all up, we'll look ahead at what's on the horizon. So the single biggest theme of the day is this clear, decisive shift away from risk. All around the world, investors are dumping their riskier assets and basically running for cover as a storm of uncertainty starts to build. So what's the emotion really driving the market right now? Is it fear or is it greed? Well, when we look at the data, everything from market momentum to where the money is flowing, the answer is overwhelmingly fear. And this isn't just a little bit of nervousness, it's a broad, significant move towards safety. The first real alarm bells started ringing during the Asian trading session. Japan's Nikkei 225 just plunged 2.8%. That is a massive drop, the kind we haven't seen in more than 6 months. It was a huge red flag that something was seriously wrong. And this wave of negativity isn't just an Asia story. It is rolling west, US futures are flashing bright red, and the tech-heavy NASDAQ 100 is pointing to a particularly rough open, down almost 1.5%. This risk-off mood is truly a global phenomenon today. Okay, so what is causing all this anxiety? The fear seems to be coming from two major geopolitical hotspots that have gotten way more intense: a political earthquake in Japan and a serious escalation in tensions between the US and China. Over in Japan, the political landscape is just in complete chaos. The ruling coalition that has been in power for 26 years has collapsed. This has created a massive power vacuum and a ton of uncertainty about who's going to lead the world's fourth largest economy. Now, this slide here shows you exactly why forming a stable new government is going to be so tough. The main opposition parties are just fundamentally divided on really big issues. You see, the CDP wants to repeal key security laws, while the DPP wants to maintain them. Then look at energy. The CDP is aiming for a zero-nuclear society, while the DPP wants to maximize nuclear power. I mean, those are huge gaps to bridge. And if there's one thing the market hates, it's this kind of instability. At the exact same time, that long-simmering trade dispute between the US and China has officially boiled over. We're now seeing concrete tit-for-tat actions. China has hit US-linked companies with sanctions, and the US has fired back by restricting the export of certain American software. We're past the point of just threats. This is an active economic conflict now. And this quote from Michael Brown over at Pepperstone really captures the mood perfectly. He points out that this conflict is putting direct pressure on risk assets, and that, quote, the tensions are more intense than market participants realize. It really feels like the market is finally waking up to how serious this is. So with all this fear in the system, the money has to go somewhere, right? We're seeing some classic flight to safety moves happening across currencies and the bond market. Let's take a closer look. In the currency markets, the Japanese yen is actually getting stronger against the dollar. Now, that's a classic safe haven move. Even with all the political drama happening in Japan, investors still see the yen as a place to hide. Meanwhile, the British pound is down nearly 0.5% after some weak jobs data has people betting on a rate cut from the Bank of England. And the euro is also down, which really just reflects broad strength in the US dollar. But here is maybe the most incredible story of the day. In a really stunning turn of events, the yield on some of Microsoft's corporate bonds has actually fallen below the yield on US Treasury bonds. Let that sink in for a second. It means some investors now think a top-tier tech company is a safer bet than the US government. Now, this is partly due to Microsoft's perfect AAA credit rating, but it also reflects some real concerns about the long-term fiscal health of the United States. The very definition of a risk-free asset is being challenged right before our eyes. So amid all of this big picture fear about geopolitics and the economy, there's this fascinating battle going on inside the equity market. It's the unstoppable AI hype train clashing with the growing fear that this whole thing is just a giant bubble waiting to pop. Let's be honest, the AI theme has been the market's main engine all year. I mean, just look at this chart. The NASDAQ 100 has surged an incredible 18% year to date. It's been pulling the rest of the market up right along with it. But the mood is definitely shifting. A new Bank of America survey just came out, and it shows that 54%, a clear majority, of global fund managers now believe that AI stocks are in a bubble. That is a complete 180 from just last month. The pros are getting really nervous. So the debate is just raging right now. On the bull side, you have companies like Samsung posting their biggest quarterly profit in years, and it's being driven by demand for AI components. But on the bear side, that same Bank of America survey lists an AI bubble as the single biggest tail risk facing the entire market. And then, somewhere in the middle, you have strategists at Goldman Sachs who believe it's still too early to be afraid of a tech bubble. The battle lines are drawn. So with this really tense backdrop, what should we be watching for next? Well, the economic calendar gives us a few clues about what could move the markets in the very near future. Okay, according to the investing.com calendar, we've got several high-impact events coming up. At 12:20 p.m. Eastern Time, Fed Chair Powell is speaking, and we'll be listening really closely for his tone on inflation and all these geopolitical risks. A few hours after that, said Governor Waller speaks, and any hints he drops about the future path of interest rates will be crucial. Then, overnight at 9:30 p.m. Eastern, we get key inflation data out of China, which will give us a vital read on the health of the world's second-largest economy. And that leaves us with the critical question for today. We have a market that's gripped by geopolitical fear, but at the same time, it's being powered by this almost euphoric belief in AI. As these two powerful forces collide, is this incredible tech rally about to face its biggest test yet? We will be watching very closely. Thanks for watching. Don't forget to like and subscribe.